Top growth stocks is the topic of today's presentation. And you might be somebody that's looking for the best growth stocks or the top growth stocks to invest in. But what you might want to ask yourself is, what is a growth stock? So in order to define what we want to invest in, we can turn to a firm that has a growth stock of its own. So this is the leading global index provider, MSCI. And to the right of this chart, you can see where their stock price has settled today. To the left is when they had their IPO in December of 2007. That was the summer that I started working at Morgan Stanley in this division, and we spun that out as an IPO. And I remember asking the hiring manager what he liked most about working at MSCI, and he said, well, it's the ability, being the salesperson that he was, it's the ability to sell into a very large universe of clients. So they had their fingers in everybody's pockets, from insurance companies to asset managers to broker-dealers to hedge funds. Everybody was purchasing data from MSCI, even if it was the smallest amount. And my path through MSCI, of course, started as an intern, and then I moved on to manage their client services desk for the EMEA region, and I transitioned that coverage to Mumbai, as many firms did around that time, moved their developed market offices to EMCs, Emerging Market Centers of Excellence, as they would say. Then I wanted exposure to Asia, so I transitioned into a operations role in Hong Kong, and there I established some teams in that region, in China, and more notably in Mumbai. And then Manila was where we ended up moving to for the, we'll just say it, the cheapest labor. I then engineered a planned exit and moved my focus to travel and adventure. So I've run a marathon on all 7 continents, for example. I'm kind of someone who seeks out exciting things to do, and at the same time I wanted to also continue my career and leverage what I had learned in my first part of my career, which was in software quality assurance and startups, and the second part of my career in finance. And that's where I built Nanalyze. I love technology, I love investing, and I love what we do here at Nanalyze. We're now in growth mode. What we do is we help people become better investors. And what we're finding is that this YouTube channel is driving a lot of strong talent our way, and of course, creating a pipeline of leads that are signing up to our premium subscription product. So I'll take off my sales hat and start talking a little bit about what MSCI does for the investment community. And we may do a series of videos starting with growth stocks. Now, when you think about growth stocks, I guess you can start by asking yourself, well, where do you look for growth? Do you look for that in developed markets, emerging markets? And you can look for it really anywhere. And how do we define growth? So in order to do that, we really need to take a factor approach. And stocks aren't binary when it comes to growth and value. They can have aspects of growth and value. So this notion of a stock existing in a growth index and a value index with different weightings is fundamental to our approach of assessing growth. And then how do we rank them? So MSCI's top-tier research team, they were noted for research. I remember a lot of clients saying that. And MSCI has competitors. They said, we always come back to MSCI for decisions, big decisions, right, in the financial community because their research team is top-tier. And I would exclude the ESG rubbish from that. MSCI is probably doing better in ESG than others, but as we pointed out in our ESG video right now, that entire domain is rife with contradictions and black boxes. So MSCI's really figured out how to slice and dice the world's stock markets. And here you can see these acronyms, of course, roll off the tip of my tongue, but MSCI ACWI, that's All Country World Index, and you can see it's made up of 2 domains. MSCI World, that's the name of their developed markets index. You can see all the countries that fall under that. And MSCI Emerging Markets, you can see all the countries that fall under that as well. And then to the right of that, you have frontier markets and then standalone markets. I'm not going to get into too much on how they classify countries, there's some interesting things to note here. For example, Korea is classified as an emerging market. That was always a big point of contention with our clients. But we're here to talk about growth, and you can't talk about growth without talking about value. And from the mid-90s to the early 2000s, MSCI took this single-dimensional framework approach where they would rank companies as value or growth based on price-to-book value ratios. Well, starting in 2003, they moved to a two-dimensional framework for style segmentation where they use multiple factors to identify value and growth characteristics. Here you can see this cool little quadrant where it shows how, you have growth and then you have non-growth, right? But there's a lot of different ways that you can describe growth and value and place companies within this spectrum. The multi-factor approach makes this a lot more intuitive. So you can see here how they're taking these variables, 3 for value, 5 for growth, and using them to classify firms. So let's look at the 5 growth variables. First, you have long-term forward earnings per share growth. That's intuitive, right? So what do analysts, and has to be more than one, believe growth will be over the next 3 to 5 years? So then short-term growth rate is the same thing, except you're taking into account the 12-month backward actual earnings per share and the 12-month forward earnings per share. Then you have internal growth rate, which is growth equals return on equity times 1 minus the payout ratio. Look, it's not important to understand these equations or how this is calculated. It's just important to understand there's actually a well thought through methodology, and you can pull this up yourself. The one I used was 2017, and they don't update these very often. And in there, it's quite nuanced, so you'll find lots of little rules and exceptions. It's quite an interesting read through if you're into financial stuff. And then they look at long-term historical earnings per share, 5-year history. That's all data, right? And then this one here. So people that subscribe to Nanalyze know that we cover really 2 areas of focus, one being disruptive technology stocks and the other being dividend growth investing. So when it comes to disruptive tech, most companies that are disrupting are capturing market share, and that a proxy for that would be revenue growth, right? So long-term historical sales per share is probably the only growth variable that would bring a disruptive tech company on the radar, because many of them out there aren't profitable. So they use that variable with 5 years of history. And then, of course, they can slice and dice that by size. This gets quite interesting, right? So you might want to pull up their small cap index and then find the growth segment of that. You see how they split that into 2 there, value and growth. And then you could take a look at small cap growth or small cap value. Then they have standard. That was a label we applied to large and mid, and you can see here where they divide standard into value and growth and then split that into large and mid. So quite interesting, right? You can look at growth in small caps, large caps, mid caps. So we have a rule here at Nanalyze. We don't invest in market caps of less than $1 billion, but that's because we're risk-averse investors. Now, when you look at what the end results are, this is quite interesting. So at the top, that's MSCI ACWI. Remember, we talked about All Country World Index. It's developed and emerging markets. MSCI ACWI growth at the top. And the usual suspects are there: Apple, Microsoft, Amazon, Nvidia, Alphabet. But look at the weighting there. These top 10 companies make up a third, and there's like 1,530 total companies in that index, yet these 10 make up a third. So very top heavy. Then below that, can you guess what that is? It's value. Okay, so then there you see a list of the top 10 value stocks, and notice how the top 10 only account for 14%, so it's a lot more distributed. And then you might ask, well, what does MSCI ACWI look like if you didn't split it between growth and value? And I pulled up here an ETF, and what you can do with these indices is you can attach an investment product to it, like a mutual fund. They call these exchange-traded funds. They're pretty easy, right? So the fund manager's job is to track the index, not to try to beat it. And here you can see iShares ACWI ETF, and then you can look at the differences between those rankings. Not very different from growth, because growth is so heavy in that entire domain. Now, what's interesting about value and growth, I've pulled up here from Verify the top 10 ETFs by AUM. And look at how they're focused around the S&P 500 there. Total stock market, I think that's a ACWI ETF. Then you have QQQ, that's the one we always use for NASDAQ as a benchmark. But look at there that we've highlighted in yellow, Vanguard Value, that follows MSCI's value index. Vanguard Growth, that follows their growth. So when it comes to a factor approach, these are called, they call this factor investing, value and growth. So see there where they've described other factors. So you have value, relatively what they say inexpensive stocks. Growth, of course, is expensive. Why? Because you're paying for the prospect of future growth, right? Size, you have large and small, as we pointed out. Momentum, so we might actually take a look at that in a future presentation because it's quite interesting. Quality, I'm not familiar with this factor. It came about probably after my time, but it's certainly something we may look at. Yield, right? That's pretty intuitive. And low volatility, so one might safely assume that there's a crossover there between value and low volatility. These are all interesting things to look at. MSCI puts out great research papers on this stuff. That's you could do a presentation on each of their research papers alone, and they do, though they're, to be honest, sometimes rather boring. Now, here's a interesting look at the concept that we've talked about so far, growth, right? Applied to a geographical region referred to as, well, you can say IFA, YAFI, whatever, Europe, Asia, and the Far East. So you can see here the breakdown. These are all developed markets in Europe and the Middle East there on the left. And then to the right, you can see, it looks like Israel's the only Middle Eastern firm there located in developed markets. And then on the right, you can see, well, in the Pacific, you have New Zealand and Australia. That's intuitive. Hong Kong, of course, Singapore, and Japan. And when you look in that part of the world, here's what comes up for growth. And, well, did you think about, Novo Nordisk, maybe them, LVMH, never really thought of them. Sony is a growth firm, right? So here, Commonwealth Bank of Australia, growth, really? So this is a look at the breakdown of the growth index in that particular region. So even though the label on the right says MSCI IFA index and shows those countries, it's just there to show the countries. This is actually the top 10 weightings for the IFA growth index. So just to conclude, it's important here, first of all, to understand that there is an industry-wide definition of what constitutes growth, and it isn't spending a Saturday morning in your underwear doing some Google searches. There's a lot of effort goes into this, and changes to these methodologies will involve consultations with hundreds of clients, maybe even thousands, provided that many people would respond to our requests when we would send out requests for feedback, and we would have webinars and present our proposed changes and hear feedback from clients and whatnot. And a lot of effort goes into creating these. And what's interesting to note is that growth makes up such a big part. It's a third of total weighting from the 1,530 stocks for MSCI in MSCI ACWI Growth. 10 of those make up a third, so it's very concentrated in growth. That's intuitive, right? Based on all the growth that we've seen in technology. And we didn't put up here the breakdowns of sector, but you can bet that information technology is heavily represented in growth. What you can then do to find the top growth stocks for wherever you're domiciled, just be careful about domestic bias, but you can use MSCI's indices, and of course you have to pay for that data, but then just look up the ETFs. Somebody's probably built an ETF on top of whatever index you're looking at, then you can find the constituents, and that's a good way to identify top growth stocks for any country or region. And when it comes to growth and value, these are two major classifications for global equities, just like size. They're that important. And the ETFs that we've looked at today, they provide an excellent way for growth exposure without having to take on company-specific risk, without having to, cherry pick stocks or try to find the next Tesla, which is not a good idea. And the other thing to note here is that disruptive technologies of the type that we cover really fly under the radar of traditional growth definitions for the reasons that we've presented today. So do me a favor, click the Nanalyze logo here on the right, subscribe to our channel, and then I've put up another video here that you might be interested in watching. Thanks for taking the time to watch this today.